All right. Welcome. Hi there. Thank you, Dana, for being here today. Thank you, everyone, for attending, giving us your time. Today, we just wanted to have a really simple conversation about the market. By the way, I'm Jeffrey Neilsen with Movement Mortgage, a real estate wealth advisor and #1 first-time buyer lender. I'm here with my cousin, Dana Rice.
I guess I always say to people, in full disclosure, I'm somehow related to this person because it feels like everyone in our family is somehow related to real estate. Am I right?
You are very correct. Yeah. And tell us where you're with, Dana.
I'm with Compass. My name's Dana Rice, Dana Neilsen Rice, and I'm with Compass Real Estate. My office is in Chevy Chase. I serve mainly DC and Maryland, and I let my Virginia license lapse, and there's good reason for that, mainly because I did not provide any value to people in Virginia, because being an expert in your marketplace is really how you help people. I wasn't an expert at that time, so I decided to let it go and just be part of a core group in Bethesda, Chevy Chase, Montgomery County, and DC.
Wonderful. We know you're killing it up there. And every time we get together at family events and gatherings, we end up having this conversation. And with this crazy market, right, and in certain times, we keep having more conversation. And so I finally said, Dana, let's get together. Let's share what's happening in your market, what's happening with buyers, what's happening with sellers, and really just kind of understand a little bit of a conversation about what she's seeing and what we're seeing from a lending point of view. Buyers and sellers point of view, and maybe we can help forecast the future, right?
Wouldn't that be nice? If we could forecast the future, I think you and I wouldn't be in this business anymore. But I will tell you that the funny part about this is these are the conversations we fall into, and it's not like I see you all the time. I mean, we're very, very fortunate that we can see each other here and there for family events, but we always end up sharing and all of the stories. What are you seeing? What are the buyers saying? What are the sellers saying? Because you and I operate in sort of different marketplaces. There's an overlap, and then when you bring everybody together. So in our family, there's you. Your mom's a realtor. I'm a realtor. My sister's married to Brian on my team, who's a realtor. My brother and nephew own a landscaping company, which, by the way, is very tied to real estate. They have 1 million real estate clients who are getting houses ready. My sister-in-law is a stager. She runs a staging company and a prep company, and that's just here in this marketplace. So we really do live, breathe, eat this stuff. And this is the part that I love, which is I always learn something that then I can take away to my clients. And that's all I care about, is what we can do to further our client success wherever that is. So if I learn something from you, I'm going to take it, and so hopefully vice versa.
Yeah. Especially in an uncertain market. This has been the most challenging, uncertain, interesting market we've ever seen. I've been doing this 20 years. I've seen, obviously, 2008. I've seen a real crash. I know what that looks, feels like, tastes like. But I also know what coming out of it and where we're at now doesn't resemble any of that. And so I think maybe as a good starting off point, we're hearing the news, right? And the news every week says very similar things about all the negativity. Obviously, rates are as high as I've ever seen them in 20 years. So those are true, but rates and what's going to happen with the market are two totally separate things. And so I guess, what are your opinion? What do you think about that?
I think that the significant thing has been not just the rates are higher. What really caught everybody by surprise, and I got called by media outlets. They wanted quotes. I'm sure you saw a lot of people sort of, the narrative was, the sky is falling. I mean that sincerely. Everybody thought, oh my gosh, what's happening? But really what was newsworthy was how fast it changed.
Yeah.
How fast it changed was almost caught off guard. We have to remember, we all came out of a global pandemic. The rates that we were working with over the last 2 years were unnaturally low. Right. 2.5% is not a real marketplace. That is a crutch that was then, substantiated by efforts by government agencies. And boy, oh boy, your industry, you guys turned on a dime.
It was unbelievable.
And you were able I mean, it really was newsworthy because of how low they were. That was the newsworthy part. What happened in the last 6 months, I would say, is more of the trajectory of rates and how fast they turned around. That was the newsworthy part. That doesn't mean that you shouldn't be buying a house right now. I am still...
Two separate things. Inflation, interest rates follow inflation, but housing and sustainability of prices are totally separate concepts. But the news has put them all together.
They got to put a spin on it. So they got to get the clicks and everything. And I'm all for it. I really am, because you start talking. Every lending partner I have became more creative. Every real estate agent I know became more creative. Don't you want that from us? Isn't that exactly what what we need to do, is be creative in getting people into a property? Don't listen to the hype. Don't, literally close your ears and get smarter is what we're asking our clients to do. Begin dialogue is how you get to that next place. And it may be, and I'm sure you had clients too, that literally were like, oh, I actually cannot buy a house right now. Cool. Right. But
we have those. No. We absolutely do. And I feel for those the most, because they were so close to buying a home and they were outbid, and they saw the last 2-year market, which was a very challenging time to get a home. Great for interest rates, great for payment, but they also were overbidding and they couldn't get into the home. Right. And so now they got priced out of the market temporarily. And I say, guys, don't worry. It's going to come back. You're going to be able to. You might have to change expectations some.
Right.
And so those are the hardest hit. But that's actually a small part of, I believe, our large pre-approved and looking database. I've got more pre-approved buyers than I've ever had in history. And a lot of them chose, you know what, we'll just wait.
Your problem.
Right.
You've got them all. I don't have enough inventory. So when the media is right now, I just saw like 3 headlines about like contracts are down, because we're the leading edge, right? What you see in the news is the trailing indicators of what's happening in the marketplace. So when they're talking about contracts are down, they're talking about October.
Right.
That was weeks ago for us. So what I see, and I don't know if it's the same where you are, there's still not enough inventory. Contracts are down only because there isn't enough and nobody wants to compromise, and you shouldn't compromise. You should absolutely be in your great house you move when you want to a great house. So don't compromise there. There's just not enough inventory. That's what I'm seeing. What are you seeing?
I've got clients that are, so you have that first, group that got priced out and they're waiting for it. Maybe they're waiting for that next job to help boost them, right? They're waiting for interest rates to come down some. They need it. There's also people that are just looking for the right home, and they're like, no, I'm motivated. Like, I see the opportunity to buy and be able to negotiate and all these great things. And I guess we should touch on that real quick too. But they haven't found the right home because of the lack of inventory. And when we really dig into that, that's not going to stop. So for the next 3-4 years, we've got a population that's going to continue to grow in size. And that's they use 33 years old as the median buying age for a first-time buyer. And so if they're going to continue to
increase, right? 33 is above what it was at a time. I mean, that seems to me to be as a first-time home buyer, that's a little older than I would expect.
It is, but that's the statistic they've been tracking as the median age. I don't exactly know how they got to that number, but that's a pretty important household formation age, let's just say. Right. And so if it's going to continue to grow, where's everyone going to go? And if everybody's going to live with their parents and, live in basements and be okay with that, fine. But we know when you get married, your life changes, growth is inevitable, families change. And so we have a shortage of housing. That's not going to stop. And so that's going to continue to put pricing pressure on keeping pricing.
The pricing is not going down. I'm sure you have the same thing is this idea that all of a sudden everything's going to come down is not the case. The sellers are in these houses and at some point they're going to move. But right now, if you locked in a refi at 3%, you have no motivation to leave. You don't need a price reduction. You're going to sit happy in your house. And so if you're a buyer, what you're not getting is, let's say, a deal. you're getting contingencies. You're getting Jeffrey's financial contingency where you get everything you want and you extend it out to 45 days. You're getting a home inspection contingency. Maybe you get a home sale contingency. The contract actually is beautiful.
Yeah.
Because it has all of these other conditions that may not be monetary, but they're absolutely giving the buyer a little more, I wouldn't say power, but just protection. Yeah. Protection. And they've been flying without a net for 2.5 years. So I'm glad to hear that you're seeing the same thing that I'm seeing, because we are interpreting what we see. It's almost like a feeling though, isn't it? Like one weekend, I'll get 6 phone calls with the same question. Right. And I'm sure you get the same thing.
Mm-hmm. And we've seen a lot of uptick in pre-approvals. So I don't know if they're announcing those things. They don't do a lot of this on the news, and the news is lagging too, but we have had an uptick in pre-approvals. I've had a lot of past clients that are, their families are changing, whether we know it or, we know it. Right. And they do want to buy another house, and they just need to be really educated to get to that buying decision or to understand what their options really are. It's easy to go, I'll just wait and see what everybody else is going to do. And I can tell you what it's going to do. So we know that inflation created a temporarily high, I call it a temporary insanity for interest rates. Inflation goes up, rates follow inflation just to protect the investment. So if it's temporarily higher, this is a short-term effect. And we're already seeing it in the fact that inflation report came out this month. Core inflation came down 0.3%, not a ton, but enough to give a huge sigh of relief in the markets.
What did you see with your rates? Did it come down last week?
It went down about 0.5% in one day, literally, and they've stayed there. They've started to progress up a little bit, but maybe even more than 0.5%. Could have been 0.75% all net. It was a drastic, great day. Yeah. And it brought us into the 6s comfortably. So we've been just, thrilled to death. I never thought I'd be thrilled to be in the 6s, right? But in the 7s, you don't know. So then as we see this, we also know that inflation is a 12-month report. And so every month going forward, we're going to see these higher inflation numbers, like 0.8% go to 0.3, save 0.5%. And if we start seeing 0.5% decrease in inflation every month, we're going to be down. We're going to be targeting getting back down to the 2% goal. Could be, maybe not this year fully, but we're going to be headed there pretty strong. And so we're going to see rates pretty quickly trend into the 5s. A lot of people are going to come swimming back to the market because that's where they were last pre-approved. When they went to 6 and 7, they're like, you know what? Who knows what's going to happen?
I know, but I want them in now. I know it's scary.
But here's the crazy part. If you wait for everybody to come flocking in the market, what's going to happen with competition and prices?
I don't want them. I mean, this is the thing. If there's one message I could deliver to buyers right now, literally, if there was one message, it would be, don't wait. Continue with your foot on the gas. Right. Continue looking at everything. Yep. Because that perfect house right now, because, it was first of all, I think that as a marketplace, we're in that regular cyclical cycle. It's very quiet right now. It's holiday time. Cool. If there's a seller on the market right now, they want to sell, right? Yep. They're in here. We have lots of sellers that are holding their inventory and waiting to the spring. Don't, because you're the only game in town if you actually put your house on the market. And then the third thing for the buyers is don't wait. Continue at the same sort of pressure on yourself to go to open houses, to get on the phone with your lender, to see everything that you can, because that house is out there. And right now there's not as many buyers. However, Jeffrey, I just had 2 contracts accepted over Thanksgiving.
Wow.
My team had 2 contracts accepted. One was off market, never was going to hit the market until January. We knew it was coming, and we're allowed to, market properties within our brokerage. So Compass was a Compass agent. He said, here's a house that's coming. We had been under contract with these folks on and off for the last 1.5 years. Probably this is like our 4th real contract, and this one's going to stick. So that wasn't even on the market. The second one that we got was literally a house that had been sitting and sitting and sitting and sitting. And then what happened at the end? 5 offers on the same day. And if I could, if a buyer could come in and just not wait for that attention and that excitement and that buyers, don't worry about the other buyers, get in there and get your offer in. So that in my particular case, my client had other things. And so the timing wasn't right, but I watched that I watched that project sit there, and then it ended up with 5 offers. So
it's amazing because I was actually just been trying to tell you, my mom's house, as you know, has been on the market, right, for months. Put it on at maybe the worst time, right? Happened to be. We didn't know history, right? Well, guess what? It finally got a contract, and a great contract at that. No contingencies, no financing. They did a home inspection prior to sending the contract.
Yeah, that's a real smart thing to do. We do that on the regular here. Pre-offer inspections is pretty standard. And that actually, as a buyer, I think it informs your purchase price. Like maybe you don't have competition and you can actually come in with some knowledge, or in competition, it makes you just a lot stronger. So I know, what is it? We've got 1 month left of the year. I wouldn't stop.
Yeah.
I would, if you're working with a buyer's agent, get on the phone with the buyer's agent and make sure they're bringing you properties that aren't listed in the MLS. They're out there. We're doing that.
Good point. That's a good point. And then we talked a little bit about creativity. So ways to get creative are really important, because if it's just black and white, buyers making decisions based on their own quick calculations, obviously there's a big disconnect, and they don't have all the answers or all the education they need. That's what we specialize in, as you know. And that 2-1 buy down, 3-1 buy down is possible. We'll get to that, but it's basically the opportunity to have a 2% lower interest rate today, where you're basically capturing the future interest rates today. You don't have to wait.
How are you structuring that? Is that a seller contribution at settlement?
It's best done that way. And when we're pre-approving our buyers, we essentially, on all buyers now, we're showing them current rates, and let's just say 6.5, but then we're showing them a 4.5%, rate for the first year, 5.5 the second, and 6.5 the third. And we're putting it that if the seller can pay this, what would stop you? What an amazing negotiation to have a 4.5, because that's where we think rates, by the way, will end up going.
Yeah, in the spring.
Not the spring, but maybe within the next year. Maybe, I think summer, depending on inflation reports, this time next year. But so definitely within that 2-3 year time frame, that'll be far too long to even consider. But if we know we're going to refinance, and it's only going to get more competitive the lower rates go, because that's the easy number for buyers, right? It's like, what's my payment? Oh, it's more expensive. Yeah. So if a seller's going to pay for you to have the comfort payment that you're comfortable with, and you can negotiate it where you couldn't negotiate it, not just for 2 years, it had been more difficult.
No, it's been a long time, but the last 2 years are crazy. Yeah.
So we have an opportunity to finally do things that we haven't been able to do. And when you negotiate it, you talk about happy buyers getting their dream home when they literally just talked to another lender and they were like, no, we're not going to buy. And I'm like, you want to just have a conversation? Can I just show you the numbers? And it's so important because.
And here's the thing, the complexity isn't as complex. It's that we have been dealing with no contingency. By the way, I'm not even putting down anyone who bought a house in the last 2 years.
No.
Awesome. You got a house. Brilliant. This isn't a bad thing. It's just a different thing. And so they can get into a contract. They get into this house that they have. Well, let's say you just went ahead with that 6.5%. If rates go up, you're at 6.5%. You look great.
Right.
If they go down, I'm not saying
when they go down, Dana.
I can't say that.
I know they're going down. I am predicting the future here. I'm a follower of Gary Habib. I give him the grace here, but yeah.
So when they go down, then you just refinance at that time. Right. So it's like you get your house, you get to go on with your life, and I just think that this idea that it's not a good time is not at all valid. It is a great time. If it's a good time for you, it's a good time for you. And there's ways around it. I'm excited. I love putting out a house and having 12 offers. Love it. But I also love really digging into what we have in terms of our leverage and what the seller needs are, what the buyer needs are, and then crafting a contract that makes sense for all parties. It's so fulfilling. And people are genuinely like, wow, I never thought I could get there. And I'm telling you right now, your lending partner is so important. I know, Jeffrey, we talk about this all the time. It's what you do for a living. You were my lender before I became a real estate agent. Like, if you know things and your partner is with you, they're looking out for you and they can really make a difference in your life. And so same thing with the realtor, obviously.
Absolutely.
obviously. So, well, I would say that the next step would be in December. Don't, my goal is to make sure I'm showing these houses that are not on the market with the understanding that they don't look great. Don't expect them to look, although staging is super important. We know that, but a lot of people aren't prepared, but that doesn't take away from the house. Now, come January, I anticipate a lot more inventory.
Gotcha. No, absolutely. Yep. Every January 2nd, right? You finish the first, the second, people are like, oh, it's a new year.
My phone rings January 2nd. I go to the office and we look at each other and we go, okay, here come the calls. Now, it's not an avalanche of calls. It's like one or two, but those people have literally been waiting for January 2nd. And then they call. You can call now.
Yep.
We'll take it now. But
exactly.
I do anticipate more inventory though coming January. I do.
Wonderful. I was going to also just note the fact that I've had a lot of past clients take me up on an offer that I've been, that's why I call myself a real estate wealth manager, is I believe in looking at your real estate as a wealth portfolio piece, right? You got your savings, your investments, and real estate wealth. And so I've long planted this seed in our clients that says, hey, when you're ready to take your next step, let us analyze your real estate as a piece of your portfolio, whether selling makes sense or buying up and renting out, which is a big part of my real estate wealth success and planning. All that experience and plan I give to my clients. And so we've had a lot of our past clients taking us up. So a big bulk of my buyers in this last 6 months or whatever have been past clients that are like, I do have 2 more kids. I want to get out of my townhome. I'd love to get my dream home. I don't think it's possible, but just, you told me something about wealth. What's that mean? And there's something really important about running it, because you're right. People have 2-3% interest rates. Their payment is super attractive. The cash flow on rentals continues to grow as rents are continuing to rise. And if they analyze it, they may end up finding, wait a minute, I can buy my dream home. Yes, my payment is higher, but my actual net true cost difference is very minor. And when they see that, it's a paradigm shift and it blows their mind. And it allows them to basically be able to plan their next purchase with total financial confidence, which this is a financial sport. I've long said this, and that's where I'm always surprised more people aren't taking us up on this offer. So I guess I'm
holistic. Are they keeping their homes to rent?
That's what we're analyzing. And whatever decision they make is best for them. But I believe getting these, especially I specialize in first time buyers. So you can imagine from a 400 to a 600, there's an analysis to be done. And, the bigger the home price, the bigger the property, clearly a different dynamic. So
most of my clients, our average price is 1.3 or 1.4 now.
Different world. Yeah.
Now we have many first-time home buyers, in general, who. Sorry, someone's at my house. We have many of them that want to hold on to that property, and they do because the rent rolls have gone up. But I don't know. Like right now, November 30th, 2022, I wouldn't say the rents are continuing to go up. There seems to be a little more inventory for rental right now than has been, but I think that's because where we are in our market, we have diplomats, World Bank, IMF. We have a lot of corporate moves and diplomatic moves from around the globe, and they are finally getting their contracts. They were on shutdown for 2 years. They didn't move. And so, and then they came back into the marketplace and the rents went up. But I would say they're probably holding steady. I wouldn't expect the rents to go up significantly in the next year.
Okay.
Yeah, there's more inventory. There's more inventory. People started figuring out, if I hold my house, then I can rent it. So that's one that's even more dynamic than sales.
Well, that's kind of what I was thinking. The fact that if there's already a lot of buyers that want to buy, haven't been able to, but you also have a pent up demand of past clients who are ready to move up, and they're scared because they love their low payment. And low payment is how do I say it nicely? Gosh, I don't think it's a nice way to say it. All right, I won't say it, but payment is a dynamic and it's really important. But if you understand the full picture, you can make a more educated decision. And so all of a sudden you take people that feel stuck. the payment, that's all there. And then they finally see the bigger picture and they go, oh, I can go buy my dream home. And when we just did this for a client, and she is selling her house, and that's great. And by the way, she was hoping to negotiate and get that seller close it, to pay the 2-1 buy down. And it was an amazing staged, recent, just renovated end unit townhome in Leesburg. And there was multiple proper offers. She got it, but we weren't able to get it. So that's the dynamics of the market, right? Great houses sell fast. But anyway, I think we're going to have a bigger pent-up demand in the spring, summer.
I do too. I think the people that have put the brakes on are still sitting there frustrated because they actually still want to move.
Yeah.
And they don't want to make a move just yet. So this is the time to start. Our spring market in Washington, D.C. and this area, to me, is end of January, early February. That's the spring market, because unless we have a superstorm or something, people are ready to go and they've all decided. So I think that would be interesting to see what happens today at this moment, because there's a lack of inventory versus January, first week of January, and what we're going to see out there. So we have a question here. What do you think?
Let's do a little Q&A, right?
Rates in the market look like in 6 months. If I find a home I love now, should I wait the 6 months? Jeffrey?
Yeah. Well, I think rates and the market, two different questions. In my opinion, and Barry Habib, the Bible, the God of mortgage bonds, we believe with inflation reports going to continue to come down every month, we're going to see rates tracking downward into the 5s. And so it wouldn't be unexpected to be obviously in the 5s in the next 6 months. So yes, that will save you money in your mortgage. But we also think they're going to end up in the 4s. And so those folks are still going to refinance. So whether you bought now or 6 months from now, you're still going to end up using the same money to refinance in the 4s, we believe, in the future. So that's not a great, thinking or reasoning to wait there. And the market, because of the increased demand, as people are all wanting a lower payment, that's the commonality. Everybody wants a low payment. So the lower the payment, the more people are going to come back. That's easy. It's the brave people, the educated, the courageous, the people that have done the buy up and rent out, right? All these things are the people that are buying homes now. And they're going to be, I used the words not too long ago, we think they're going to be buying in at the ground floor of this new level because it's going to escalate prices as we see competition in the markets again.
Well, you've been at this for 20 years and I've been at it for 9. So I didn't live through 2008. I did live through the 2013 government shutdown. that was our big trauma. But I think if I saw something today and it was a reasonable house at a reasonable price, not crazy, don't think it's going to be lower than the comps. As long as it's within the market of what the comps were, then I would go for it. Because right now you actually have a choice as a buyer. Right. Just don't compromise. Don't just buy something to buy something, but definitely step in if it hits 90% of 85 to 90% of what you're looking for. The other thing I would say that I think is important for buyers right now, and we talked about this a little bit, is that when the houses are on the market, they're perfect and they look great, and that's so important because the staging and all of this is how we make a living. We make it look amazing and everybody comes. In this marketplace, my opinion is you, as a buyer, you almost have to get off of Instagram. You have to get off of Pinterest. The real value, of course, if it looks great, everybody's going to love it, but you can make a house look great without, your equity is built into the paint that you put on and the light fixtures that you select. So if you can get past it and be okay with the ugly duckling, because we all kind of went away from that. We were like, I'll take anything. And, and the sellers are delivering these amazing looking houses. That would be my opinion in terms of what a buyer could do right now, is really get the blinders off with this idea that everything has to look like selling Sunset. It doesn't look like that in the real world. And you can find some equity by just picking up a paintbrush yourself and changing a light fixture yourself. So
great. I've got a question from Karen Kelly. How much does a point help with a jumbo loan? So that's actually a huge, I'm so glad that you asked that, Karen. Points are traditionally, we've all talked about points because that's the only way to get a lower interest rate. So typically jumbo or regular, the model's about 1 point equals about a quarter lower interest rate. So a half a point equals an eighth in interest rate. Those I never called them permanent points. I never had to before, but those are permanent points, meaning the money you spend today on those is out the window the minute you close. There's also temporary buy down, or temporary, we'll call it points, and that's what the 2-year buy down is that you're actually using this money bought down. It's about 2%, by the way, for a 2-year buy down, a little less, maybe 0.75% for a 1-year buy down, which is a 1% lower rate for the first year. That is temporary, meaning if you refinanced in this time next year, whatever money is left over is literally yours, and it goes back to the principal. So it's like,
can I just clarify, because I'm kind of stupid with this.
Nope, I love it. Thanks.
Let's just use round numbers. $10,000 towards this buy down.
Yep.
Is it literally, thinking, tactical, is it $10,000 that you put almost in an escrow or an account then just gets added each month, almost like an escrow payment? How
exactly? It actually gets held by the servicer, and it makes the difference between 6.5 and 4.5, or from 4.5 to 6.5. So it actually makes up that $1,000 payment on an $800,000 loan. Let's just say.
And that's why it's temporary.
That's why it's temporary, because you actually get it back. If you don't use it, you don't lose it. So I have clients that have pitted me against other lenders, and I'm like, are you really working with someone that's trying to show you a lower rate with 2 points? I'm not going to name credit unions and things, but very common to look at the board and go, well, you can have this rate or 1 point. Most of our rates come with 1 or 2 points. Paying points in today's market is the last thing you want. So when I have clients asking, what's the lowest rate? I go, you don't want the lowest rate. You want the lowest cost, and you want the best strategy to be comfortable. And when you put that together, it's a much better value.
Is this a new way of structuring a loan? Because of course, I think everybody's familiar with the buy down where you lose the money forever. Is this new?
It's new because we never needed it, right? When rates are 3%, where are you going, right? What's a buy down for? If you can't afford it at 3, we're in trouble, right? Shouldn't be buying. Yeah. So when you get up to 5, 6, 7, all of a sudden people's comfort was out of whack, right? Now we hit 7.5% at one point, right? Can you imagine? I cringed sending numbers. Well, 5.5, okay, that seems more real. We can understand that. So yes, it is a new concept, and a lot of people are missing it. They're not getting presented it, and they're probably not buying a house because they're just looking at today's payment when they really should be focused. This is a glip. We know how fast 2022 went by, right? I mean, it was amazing, but it was a lot to learn. It was a great year, but it flew by, I'll say.
Yeah. Okay, one more question on that part. Yep. That $10,000, we're just talking in general. Is there any restriction that can a seller contribute $10,000 to settlement costs? Does that $10,000 have to come from the buyer?
No. Does it have to come from the seller, right?
No, I mean, are there any restrictions on it? Can I say, all right, I'm going to do this buy down and I'm going to have the seller contribute $10,000 to it?
It's just a seller credit at the end of the day. So there's caps, right? With conventional putting less than 10% down, it's 3%. So if you got 3%, let's just say that was the exact amount of your normal closing costs, and then you added on 2% more for buyer, for the buy down.
Sure.
You'd really just be using it towards your closing costs, but you're getting the buy down. So,
got it. Oh, that's amazing, and you're right. Why did we need to be creative before? Now
we didn't. Everybody, and that was also part of the not problem, but the reason everybody could buy is because everybody could buy, right? And so you didn't need this. I was still giving this profound education to my clients, and in retrospect, I'm proud of it. So I'll never, but I overworked, it's not such a thing. I'm not going to say it, but you know what I'm saying? They didn't even need it. People just go to a credit union, fill out a thing and get a loan and be totally good. When it's at 3%, it's really easy to be easily, there's not a lot of creativity needed. So professionals and experts in today's market, like you, Dana, like myself, we're going to thrive in a market like this. And a lot of people are getting out of business. I heard a statistic, I better not say it because I don't even know if it's true. I didn't verify it, but something like 70% of lenders were out of business or something crazy like that. I don't.
Yeah, I think we noticed that And just like real estate, just like lenders, the people, there's going to be a rush to expertise. There's going to be a rush to experience, because when you're going through this and navigating this, you really do need to have peace of mind that you're doing the right thing, not only for yourself, but that you are aware of what's happening in the marketplace. And it's too bad. But the reality is the last 2 years were not normal. They were absolutely not natural in terms of what a balanced marketplace is. A free market decides the world. And we are talking about supply and demand. And, that supply and demand is what creates the environment of I'm going to go buy the house or I'm not. It's weird that people would wait for multiple offers to then say, oh, I got to get my head in the game. I don't understand that. Don't worry about everybody else.
I think it's the same reason I have clients trying to put down $400,000 on a $400,000 home and forget a loan. And I go, you need to talk to an advisor, an investment advisor. This is the time to be investing in the market, not when it's at a sky high rate. And maybe
nothing's better than a few real estate holdings while you're balancing out your stock, while you're looking at your 401k. And I have 529s because I have kids in college, and I'm looking at that. I'm like, wow, it's a good thing they're in college now, because that took a hit too, all of it. So it's a balance.
But meaning, like, when everybody's not investing, that's the time to invest. The same in real estate. So it's tough. It takes courage. So we're here to give you courage, bravery, and expertise.
Yeah. We do have another question here about home equity construction loans. I personally have some experience in that, because I'm trying to get one myself, and I find that tell us a little bit about construction loans or HELOCs, home equity lines of credit, in terms of what you're seeing interest rates, and what are you seeing in terms of demand? Are people doing them? Are they not doing them?
Your question's a little more, maybe we'll save it. I can get it offline. For this one in particular, it's just a little bit deeper, but the easy answer, construction loans are fabulous, right? Actual full-on tear-down construction loans have gone up in cost significantly, lending wise. Maybe it's temporarily, and we hope they come back to a better level. But renovation loans have been unbelievable. Fannie Mae has the new loan limits too, right? So Fannie Mae just raised loan limits, and this would impact.
This is today's announcement from. Okay, so what is today's announcement?
So now just a conforming regular 3% down financing for Fannie, Freddie Mac went up to $726,200. So 3% down is all you need. That's like a $740 sales price, 3% down, and then up to $1,089,300. You can actually, it's called high balance. It's just same Fannie Mae loan, 5% down.
Right.
Pretty tremendous. As we're laughing because it used to be 400, 417.
I think it was like 417 was it's incredible.
Yeah.
But that's in certain marketplaces. We're in the one of the higher expensive marketplaces.
All of Northern Virginia, DC, Maryland, all of our main counties are in this high cost limit. So it's tremendous. It just means you don't need 20% in any market. When you get above the 1.8, 1.1, that's where jumbo financing becomes, and that's where 20% is a lot more important to get the best financing.
Right.
So,
right. Although I did find out that the last two that we did, the jumbo were lower in the interest rate than
exactly. But the key is having that 20% down gets you to that best. They have less than 20%, but the best interest rates do fall within that. Correct. Yeah. I think lastly too, just while you're hitting lending, ARMs were a hot topic for a while, and there was a lot of low cost money that banks and things had kind of compressed and held on to, and they basically got rid of it all. So, and these ARMs also come with a larger points, right? And so we're talking about, would you like a lower rate, but it's going to come with 1.5 points, and that money's
1.5 points
essentially lost. And so that's where you might take the 30-year higher rate and pay no money. And a perfect example of low cost is your most important, because everyone's going to refinance. I say that Without a doubt. You've heard it here.
You're predicting the future.
I'm predicting the future. I'm okay with that.
Okay, all right. I'm going to go with that. We're going to come back to this recording and say Jeffrey Neilsen said.
I love it. We'll hit this in April or May and see where we're at. Okay.
Yeah,
Let's
no kidding.
do this again, Dana. This was awesome.
You know what? I think considering this is all we talk about, and I'm sure our spouses are exhausted by it. Well, actually, your spouse works in the business too.
That's
so
true. But
I tell you,
we do it, together. Yeah, not with her.
Yeah, so I'm glad that we got to, because this is the stuff that's so exciting about this job is what can we do to change the lives of our clients just by expertise and knowledge. And that to me is, I love it. I absolutely love it. So.
Well, thank you everyone for attending. Thank you, Dana, for your wisdom.
And Jeffrey for your wisdom. Absolutely. We'll see you soon.
Thank you guys. Appreciate it. Have a wonderful day. Great holiday season.
Yep. Bye-bye.
Bye.